Please. Here we go. Sorry. Right, off we go. So quickly on housekeeping, all the phones are on mute just to keep down interference. However, please do ask questions as we go by typing them into the box on the right-hand side of the screen. I will try and cover as many as possible at the end of the session. Your presenter today is Paul Love. I'm a consultant at ACI Worldwide with responsibility for the issuing and acquiring business within our retail payments practice. Now, please let me introduce ACI to you. This month, ACI is celebrating 35 years in the cards business. In October 1975, ACI began a long and eventful journey to become the company it is today, trusted by more than 750 customers in nearly 100 countries and at the heart of payment systems globally. Our solutions are used within 19 of the top 20 banks in the world. In EMEA, however, we have now over 230 customers, with offices in many of the major financial centres throughout the region, and knowledgeable staff who understand our local markets. As part of that 35-year history, ACI has had a card management solution in the EMEA for the last 15 years, and this is currently in use with over 20 customers throughout the region. However, last year ACI acquired the issuer, acquirer and interchange products of Ascentis and has integrated these industry trend products to become global solutions within its overall retail payments proposition. Traditionally, ACI has been well known for its strength in the network interface domain, with Base24 and more recently PRM. However, the acquirer and issuer products sit in the customer and merchant management domain. They offer solutions for managing the relationships with merchants and customers, their cards and accounts. The primary focus is to support the revenue-generating activities of both acquirers and issuers. ACI Interchange also adds a clearing and settlement solution into the network interface domain. With these new capabilities, ACI is now able to offer a full end-to-end solution as part of an integrated retail payment solution. In today's webinar, we are focusing on one area where these new solutions enable ACI to bring new value to our issuers and acquirers. So now, let's look at how banks can grow their cards business in the face of regulation and competition. In the last two webinars, we talked about interchange and legacy systems. Today, we're going to look at two more examples of the pressures faced by banks in their cards business, that is, regulation and competition. I link these two aspects together for this webinar, as they are key to running a successful cards business. They both represent external pressures, they both require resources to manage effectively, and they both represent obstacles to growth. However, where they differ is that compliance is required to keep the gates open for business, but only by competing effectively will banks bring in customers and grow a profitable cards business. There are many regulatory and compliance issues, and I have listed some of the main areas which we'll look at further on the slide here. The point to note, however, here is that keeping up with the ever-increasing level of regulations is like keeping plates spinning, as all areas need constant attention, and if a single issue is allowed to fall out of compliance, it could bring down the whole operation. For many cards businesses, both issuers and acquirers, achieving and maintaining card scheme compliance is seen as just one of those costs of doing business. However, the cost of compliance has risen over recent years, as there are now far more card schemes to work with, for example, with the emergence of JCB and China Union Pay and potentially new Russian card networks. And for the larger businesses with international operations, they now have several domestic networks to deal with as they grow cross-border business. Moreover, the increasing level of compliance consumes significant resources, which for many banks are basically rare, highly skilled and expensive people to retain. The picture here shows the fourth rail bridge And a common saying in the UK is that painting this bridge is an endless task. As soon as you have painted from one end to the other, it's time to start again at the beginning. For EMV, contactless mobile, two-factor authentication, etc., there was a lot of excitement in the cards industry, and especially at the recent EMEA conference I attended in Paris, around these new channels, such as contactless and mobile payments, and their ability to grow new transaction volumes in new market segments. However, for the purpose of this webinar, I wanted to show the effort that not only goes into the initial development of such channels, but also into the ongoing maintenance and updates required to keep up with the emerging and changing standards. Hence the picture of the large number of developers that lie behind every new initiative. While this effort may be justified for individual developments, when all such developments are taken together and the ongoing cost of maintenance and keeping up to date is considered, they do require significant resources. The EU and its various bodies are a whole new source of regulation and standardization. The Payment Services Directive, or PSD for short, is now enshrined in national law in virtually all European countries, and this governs what services banks can offer to their customers. The directive also defines a new payment institution, which will allow non-bank organisations to be active in the cards business and the payments business, and also to become full members of the payment schemes, such as Visa and MasterCard, in their own right. One of the greatest mysteries of the payments world is what will be the end date of non-SEPA instruments for direct debit and credit transfers, which will force the banks currently sitting on the fence to make the jump to SEPA payments instruments. But more worryingly for any cards business, recent comments from the European Central Bank's Gertrude Temple-Gurgerel sought to bring cards into the focus of this new legislation. In a recent statement, she confirmed the ECB's desire for a third European scheme to emerge. She also suggested that the use of ISO 222 message standards for card payments should be adopted. They suggested that a state-of-the-art authentication for card-not-present transactions, which at the moment would probably require some form of two-factor authentication to be involved. And finally, they also suggested that rollout of EMV-only chip cards throughout Europe from 2012, and finally eradicating the magnetic stripe card. All of these additions will place even greater strain on a bank's compliance department as they come through. Another standard that incurs huge pressure on banks' resources, but without the clarity of detailed requirements, is PCI. While the principles are clear, the details are still open to interpretation, especially for card issuers. There are many alternative solutions open to banks, but those banks looking to make their aging legacy platforms PCI compliant will often have a very large job ahead of them. The certification process is not helped by an army of assessors, each of whom interpret the details of the regulations differently. And more alarmingly, the failure of PCI protection is also made very public. And for some recent examples, we've seen stories about Hallmark and TJX in the US, where huge damages have been levied against these people. In the UK, at least, the consumer credit tax has been in place for many, many years. However, following the recent credit crunch and banking crisis, card issuers started to raise their prices, and other revenue streams, such as penalty fees, were introduced. These charges were subject to intense scrutiny. In the US, for example, much has been made of the recent Credit Card Act, which had been introduced into law and put restrictions around what charges could be made by banks to their customers. In the UK, however, many of these restrictions were put into a voluntary banking code, but the limitations are still the same. These types of regulations do not actually affect the physical card or the card technology. However, they do often regulate the account behind the card and the way that is operated. Such regulations also restrict the revenue generation opportunities available to banks, and they may also impose additional disclosure requirements around fees and charges. These types of regulations can also add significant changes to card management platforms. At the recent ACI Payments Forum, several banks said that their compliance efforts consume almost 10% of their annual budget. Every one-off development, such as the development of new channels and the implementation of new laws and regulations, etc., serve to add another set of updates into this regular compliance workload. With the same survey also saying that 80% was spent on operations and maintenance, that only leaves 10% left for innovation in new products and services. Exactly the sorts of things we want to have when we're considering the competitive landscape. Which brings me nicely on to the next section, which is looking at the competitive landscape. So, with this slide, I just wanted to give a brief snapshot of the types of new players that are entering the payments business. This year saw the launch of Metro Bank, the first new high street bank with branches in the UK for over 30 years. I've also included in this section Santander as an example of a new entrant. They're not strictly a new entrant in the UK market, but they have just rebranded all three separate and established UK banks, which were under the Santander umbrella, under the Santander brand directly. This year saw Tesco launch Tesco Bank in the UK. While they have offered financial services for a while, launching their own bank is a significant step change in their competitive positioning. For e-money issuers, the success of PayPal has been quoted many times, but it is now becoming an international payment scheme, and a mature international payment scheme, and spreading its services much wider than its original eBay roots. Initiatives around mobile payments, such as M-Pesa, are hugely successful in developing countries where there is no established banking infrastructure, but where mobile phones are very, very widespread indeed. However, in developed environments, I see mobile crossover as one of those key areas. This is where the mobile operators are using their huge customer base as a channel for launching their own payments business. I think this is still in its early days at the moment, but as mobile payments mature, the threat to the traditional banks from these players will increase. While most of these examples and logos I've included are very much UK focused, that's because I'm very familiar with them. I'm sure you are very aware of some similar new entrants and similar threats in your own countries. Okay. Disintermediation. The internet age brings in new challenges. Disintermediation is happening in the payments world as new players are now own the customer relationship and the channel. They have gained large customer bases, and they also exploit their brand and their trusted status to offer their customers payment options that are both highly relevant and appealing to their customers, that are also highly convenient to them. Not only are they able to use their existing channels to drive customer interaction, they can also front-end the current payments infrastructure. Some solutions also have the power to create their own currency. For example, the Linden dollar in Second Life, and I've also heard talk of Twitter Pay for micropayments. This front-ending of the payments infrastructure leaves the banks to carry the processing costs of payments, but robs them of the ability to generate other revenues from the wider banking relationship. As the picture shows, technology is changing our perception of the world at ever-increasing rate. Only 30 years ago, Sega Pong represented the height of the game's design, and it now looks completely outdated. Similar progress is happening in the world of payments. One very real example is that checks have been withdrawn in the Netherlands market, and will shortly be withdrawn in the UK too by 2018. While the future is not yet clear, it certainly will be different. If you want to ask me my predictions for the next 2 to 5 years, I would say that contactless will actually roll out. I was a doubter for a while, but I think contactless will now is being pushed so heavily by the payment schemes that it will actually roll out. Mobile will actually be a game change for the payments world. We've not seen its true impact yet. I think that will really come to bear in the next 5 years. Also, the product mix will change between debit, credit, and prepaid, with possibly a blurring of the boundaries between those three products. And I still see some new channels and some new players emerging to enter the payments world. Who they are is very difficult to tell, but retailers, telcos would be would be very high in my list of suspects. Okay, so let's quickly look at how we can respond to the pressures of regulation and competition. My suggestion is that you recognize the customer as king, as without a customer, there is no cards business. This means that the focus of efforts and investment should be on attracting and retaining customers, as the customer relationship is key to growing cards business. The IT systems that banks operate and maintain should support the business and not hold it back. In the very first slide today, I showed a set of gates representing the compliance requirements. Issuers and acquirers need to find the right balance in their ongoing spending and investment between keeping the gates open and also competing to attract customers. Both elements are required. Regulation and compliance constrains business, but it must be managed efficiently and effectively to free up valuable expert resources and to grow the business. While competition changes and motivates business, the key is flexibility and responsiveness, and speed to market is vital to grow market share. In the second webinar in the series, we covered the impact of running many silo solutions in a cards business. Not only does operating multiple silos duplicate the compliance and multiply the effort required, tying up valuable resources, it also hinders innovation and speed to market required to remain competitive. Also, the silos do not provide the bank with a single customer view, vital for them to focus on the customer as king. This also brings us back to one of the conclusions from the first webinar. Growing a cards business is about attracting and retaining loyal customers. I do not really intend to repeat the content in detail here today, but I do want to emphasize that this is best achieved through intense customer focus. Focusing internally on compliance pressures will keep the gates open, but will not bring in the customers. Let's look at a quick case study. There are lots of examples of good and bad customer service, but recently there's been a lot of press attention for the 25th anniversary of First Direct, who were set up in the UK as a telephone and internet-only bank within the HSBC group. I wanted to use this as a case study, as they have not only survived 25 years and grown their business without a single branch, but they have also won many awards as the best bank in the UK and voted for by their customers. While I cannot comment on the underlying technology platforms, their customer focus and measured customer satisfaction is very demonstrable. One specific example I like to use is that when I call them, they do not ask me for an account number or a card number, but instead simply ask me for my name and my postcode. This information not only provides sufficient data to locate my details in their system, but also sets a much more personal and friendly tone for their call. Also, they do not use call scripts, but use their staff, who are highly trained and highly motivated, to take sufficient time to make sure the customer is fully satisfied with the result of the call. The resulting surveys and awards speak for themselves. I I would now like to summarize today's webinar by just asking some key questions. Can you keep up to date with new regulations and compliance requirements? Or does your current infrastructure require too much focus and resource in this area? Are you able to focus on your customers to stay ahead of the competition? This is key, but it requires a positive choice to focus in this area, rather than just to maintain the systems as business as usual. And finally, are your systems able, flexible, and responsive enough to give you the speed to market? This is vital to react to the ever-changing markets and to quickly adopt to new emerging payment channels. Issuers and acquirers should ensure that they have a flexible and responsive platform that not only saves costs, but allows them to move quickly and to maintain their current competitive position in the market and focus on their most important asset, their customers. Okay. Well, thank you for your attention. I would now like to open the session up for questions. Well, we do have some questions already. We just have a couple of questions. Please type any further questions into the box on the right-hand side of the WebEx screen and send them through to the host. So, the first question I have is, what do you suggest is the best way to manage compliance efficiently? Well, actually, I'm very glad someone asked me that question, as my intention with the webinar was to get people to think about how much time and effort they devote to the compliance and the impact it has on their business. My very real suggestion would be to localize and consolidate the areas affected by compliance. For one example, within the ACI product set, virtually all the scheme compliance is managed through the ACI interchange product, leaving issuer and acquirer free to concentrate on meeting the business requirements around card issuing, rather than those interfaces and compliance issues which would take up so much time if they were spread around the systems. Okay. The second question I had was, can I get some specific support for doing compliance? I think that's a difficult question to answer unless, of course, you have a product from a vendor. In the case of the ACI products, compliance is included as part of the overall support agreement, and we make biannual releases, and these are provided in advance of the scheme's compliance dates. I think trying to do that if you are not on a current, up-to-date, supported platform is a different proposition, and in which case you really want to look at consolidating those down and making life very simple for yourself. Okay. I think we just have one more question. We are looking at contactless. Does ACI issuer support contactless cards? Okay. Well, the answer is yes, it does. In fact, ACI issuer supports all card types, and will also support any emerging channels, because those card types and those channel types are really seen around the periphery of the solutions. The core accounting and the core management is agnostic of the channel. So issuer does support contactless cards. And in fact, we do have some customers in Europe who are starting to roll out contactless cards as we speak. However, to get the best benefit from deploying EMV contactless cards, I would suggest that you look at the ACI Token Manager product too, which would be used to personalize and manage the card parameters, so you can actually get the best value out of these new, shall we say, more expensive EMV cards. So you can actually manage the parameters, set risk limits, and keep them current with changes to the standards as they are rolled out. Okay. Do we have any more questions? Okay. In that case, I will draw the webinar to a close. May I just spare me a second? Thank you for attending today's webinar. I hope you found it interesting and useful. We will make a recording of this webinar available shortly on the website. May I just take the opportunity to remind you the next webinar in the series, Profiting from New Technology and Customer Demands, will be broadcast on Friday, the 5th of November at 12 p.m. UK time. Please note this will be on a Friday and not on a Thursday as the previous webinars. For those of you in the UK, this is Guy Fawkes Day, so that may help you to remember which day it is. Thank you very much, and goodbye.